which will come in 600 million in the last 30 days. Oh boy.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Recorded July 21st, 2017. It's the Money Path Podcast with your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. On episode 81, The What and the Why is sponsored by MotiveWave. Go to pathtradingpartners.com and download that 14-day free trial. So let's join Bob and Mike with a casual conversation with news and the market.
All right. I've got to sigh. You know why?
Why?
You know how much time I've got this last week? See, told you just have to buy every dip.
Oh my God.
So I said, well, you buy every dip. Some of the stuff hasn't come back. Like, Tesla will, and Apple
it will.
It'll all come, just buy it. So it's now the ones that haven't gone to new time highs, you load up more. Oh, and the favorite thing is, see, this one just took a little longer. So all we did was dollar cost average. We just kept buying more every time it dipped.
Dollar cost average.
Yes. For which I would not recommend for momentum stocks.
Do these people that you have these conversations with listen to the show?
Yeah.
Okay, you will be bankrupt. I'm serious, you will be. It may not be this year. It may not be in 5 years. But if this is a consistent strategy, I promise you, and this is on record, you will be bankrupt. Your account will be for sure. So all that dip buying and leveraging and dollar cost averaging, which we who've traded for multiple years call adding to a loser, because that's what it is. Dollar cost averaging is a way for Wall Street to have continually gotten your money even when they're underperforming. So, yeah. So you'll be bankrupt. Unless you come up with a part of your strategy and taking some of that money and taking it out of the market when you make it. That's the only way to survive. That's on record. We can put this in a time capsule.
It needs a time capsule because, well, I don't mind, like for values, like large dividend playing value stocks that are not going anywhere, like, all right, you're going to work into a position, possibly in a pullback or a bear market or something that's, all right, they're key place I'm going to add to a core position, like for maybe a Walmart or an AT&T or something that's not going to disappear. But I'm not dollar cost averaging with a like, let's see, with like a Tesla. That's not happening.
Yeah, I mean, my main point about saying you will be bankrupt references the buy every dip leveraged.
Yep.
If you're somebody who just wants to accumulate a set of particular stocks, then I don't have any problem with you buying every dip. Like, I'm not going to, I'm just going to accumulate these. Every time they go down, I'm going to get a better price for a stock that I want to hold for 10 years. That's a different conversation. But buying every stock on margin, leveraged, or any of that sort of stuff because you make so much more when it goes back up, that's expecting it to go back up every time in a short period of time. And that doesn't happen. It just doesn't. You could look at any chart of almost any stock, and it does not happen in a permanent way.
So don't burst the bubble.
I just trying to help. That's what we're here for. If you're going to do it leveraged like that, every time you make a good chunk of money, take a majority of that out of the market and don't re-risk it. Do that with house money. That's different. But if that's your strategy and you're in your 40s or 50s and you plan on retiring in 10 years with that, The S&P drops 40, 50% at least once every 10 years. So get ready for that.
No, it's permanent QE, buddy. It's never dropping again.
You might be right. Even Draghi said it this week, so that's a wild card.
It's permanent. We're in permanent QE land until everything implodes.
Even Draghi said it this week.
Speaking of that, because we covered this on our video path chats, the VIX 977.
Mm-hmm.
8 handle. I'm calling it officially. Put that in the time capsule too. We'll see an 8 handle. Maybe not on a closing basis, but I want to see a print of 899 in the VIX. All right, that will make me very happy, because then we're we have ludicrous mode in Teslas. We'll have ludicrous mode in the VIX. The VIX all-time lows, new all-time lows. Oh
yeah, I don't know. I mean, what's going to happen to these stocks if North Korea blows up?
Well, it could be.
How's your leveraged stock play going to go if we get into a war, potentially into a nuclear war with North Korea?
Yeah. Well,
how's that going to go?
Huh?
How's that going to go?
Sideways.
I'm kidding.
We talked about Twitter. Was that last week? It did not close above the key point, but looks like it's going to close above the 1979 this week. So that could be in play on that Twitter thing. Just to recap with the FANG stocks, which we're also doing our video update. Facebook, let's see, it actually hit. I had a couple targets on here. If we're going to all new time highs. 161.72, which was hit, and then the next target 166.93. So far, we've hit a high this week of 165.70. So those targets have been hit. Apple still not at new highs yet, but it's holding the rotation. A very key area now at this 142 level. So if you see a trade back below 142, watch out below. It triggered a very sloppy double bottom and already hit its stop reduction zone at the 150.42 level. So be watching for that. The full target on that sloppy double bottom would be 154.35. So we could see Apple rally back up to there. Just covering some of these stocks I know a lot of people are in or interested in. Amazon, oh, look at that. All new time highs, 110.34.97 so far. We have a lot of Amazon news to follow up though on. What else do we have? Nvidia approaching its old prior high of 168.50 right now, 167.50. What have I missed? Microsoft, that went to highs 74.30. And if people want to, we'll have all these updated in our Path Chat videos on our YouTube channel this weekend. So if you want the next price levels or what's been hit with the market officially opening, we'll cover all that. Did I forget? What's another FANG stuff? Oh, Netflix. We'll cover juicy earnings from Netflix. I love this.
Did.
Huh?
I did see it.
Oh, Netflix is. Did you see what they're paying per subscriber now to acquire a new subscriber? And so we'll have to cover all that. What I want to also cover, though, before we get into those, is this going to save Snapchat? NBC's twice daily Snapchat news show is now live. The network is launching a twice daily Snapchat news show. Stay tuned to keep the smartphone crowd up to speed. Each 3-minute clip is effectively a condensed, slightly more, quote, youthful take on conventional broadcast. The show isn't talking down to viewers, NBC says, but you will see Snapchat-like captions for recorded quotes and other attempts to match the style you'd expect on the service. Oh, boy. So we're going to get 3-minute NBC video clips in the Snapchat style. Snapchat made a low this week, 1463. I don't know.
They're using GoPro to record that.
See, I told you Snapchat should have bought GoPro, Twitter. They should have spent all their money, bought all these companies, and then they could tweet out, record stuff on GoPro, you could have your GoPro snap glasses. What other? They could probably buy Blue Apron to deliver all the food, because Blue Apron's now hit a low 623. That's down over 40% from its highs and almost nearly 40% from its open IPO. That hurts.
That's Blue Apron-like numbers.
Well, now we got the tie-in with Amazon, because Amazon this week announced Amazon meal kits are already available for some consumers. The prepackaged kit service is more bad news for Blue Apron.
Ugh.
So they registered the trademark meal kit service with the slogan, "We do the prep, you be the chef." So these kits are already available to some Amazon Fresh customers for the last couple weeks. There's 17 different options available, including tacos al pastor with pork, veggie burger with some sauce I can't pronounce, smoked eggplant, which is something I'm not going to eat, some steak thing with Parmesan fries and snap peas.
Steak thing.
Yeah. I'm really bad with pronouncing names.
It's steak au poivre, and this harissa aioli.
I can't. This is why you're a TV guy, because I'd just be up there and they're going to say, "Can you say this word?" And I'd be like, "No." I'd mispronounce everybody's name. I'd be on TV for like 36 seconds before they'd be pulling the plug and be like, "You can't say any words." Be like, yeah.
The steak fries are with Parmesan.
Oh, Parmesan? I thought it was.
It's Parmesan, you knucklehead.
Yeah, but
making fun.
Parmesan. So Amazon's now going to be taking on Blue Apron.
Yeah, we knew that, right? We talked about it the day that was announced.
So
I'm sorry, the day the Whole Foods deal was announced, but I don't think this is necessarily so quickly because of Whole Foods, but It definitely makes them a much bigger threat down the road using Whole Foods ingredients and things just because of the marketing of it.
Yep.
I hope frickin' Amazon doesn't go into financial podcasting.
They could acquire us.
Yeah, they could acquire us. Will cost less than Whole Foods.
Just slightly. Well, at least for my portion. I mean, not necessarily for Bob Iacchino, but for.
Well, I pronounce all the names, so they need me.
Yeah, they need you. I'm disposable. He's just a show note guy and the guy who sighs a lot. He's replaceable. So this came out. Reuters just reported the FTC's starting to look into allegations that Amazon misleads customers about its pricing discounts. Then they're all starting to look into the whole Whole Foods deal also. That's going to be interesting.
Yeah, very interesting.
But that made Amazon pull back yesterday by Amazon just gapped lower today. But it returned to its breakout zone. And it's already rallying back up. So nothing to see there. So we'll have to see. I don't know. You think they'll actually block the Whole Foods deal?
No, I don't think so.
I don't think it's so either.
I don't think they'll do that.
But there's so many things trading off headlines that whatever headline comes out, that's where you get these rapid dips, and it gives you opportunity to buy the dip.
All right. Sure. Just keep buying it. Mohammed Al-Aryan. You know who he is, right?
Yeah. Odd guy.
Used to be a PIMCO. Now he's of, I think, Zurich. I think he's at Zurich now. But just a very, very smart guy. Basically said that the markets, investors have been given a gift, but it won't last. The gift was lower bond rates in the short term. We never really talked about, I'm straying away from your notes, but we never really talked about the effect of that. It's like, people look at CPI and they look at the Fed and everything, but if bond rates start to move, there's nothing anybody can do about it. And they did move a couple of weeks ago. That's maybe 10 days ago or so. They moved pretty dramatically up. And if they were to continue to move up for any reason at all, usually that reason would be pending inflation, but just there's nothing stocks can do about it. Stocks can't recover from that.
the bonds and notes charts, because I have a massive triggered weekly double bottom that we've talked about in the past on notes that did hit the stop reduction. Now it's rallying back up. It's back above the entry price.
Mm-hmm.
So I'm just keeping an eye on that to see how that's going to play out.
Tacos al pastor, huh?
Now, we have to touch on...
Speaking of Mexican food.
Yeah, good. See? What's going on with Chipotle?
A day after Chipotle Mexican Grill faced an outbreak of norovirus at a Chipotle restaurant in Virginia, the company's PR team is dealing with yet another embarrassing public health incident. A Dallas TV station reported that at one local Chipotle restaurant, customers' lunch was ruined when several rodents reportedly fell from the ceiling and landed inside the dining area.
I watched the video on that, and people are like, what is that?
Is there a video?
Yes.
Oh, my Lord.
There are people like recording it on their phones. What is that? What is that? It's a rat. It's like, run for your lives.
For your lives.
When it rains, it pours. Literally, when it rains rats, it pours. Chipotle's had a couple bad days. Their stock, wow. It hit our...
I haven't looked at this stock. I want to look at it now.
You don't want to look at it.
Really? I love you. I'm telling you, rodents know where the good food is. Oh, my Lord. That is a bad-looking chart.
It rallied up to our targets.
It did.
And now it's got a critical line in the sand at pretty much, for me, 352.96. If you get a close below that, you could see this. You could see possibly Chipotle return to next two targets lower would be 302 and then 251. But they'll recover from this at some point. There'll be another buying opportunity in Chipotle. I just would not buy this chart at any point right now. And
yeah, it's ugly.
Yeah, this is not one. I need a high probability reversal signal or for it to build a base again like it did before, which then we broke out. We ran up to close to the 500s, and then, those were the levels, and now we're back.
And this is a great example of sort of what we're talking about. I mean, you can go back as far as 2012, and Chipotle was still $233. So, yeah, of course you buy every dip in this stock, but it's got to be the kind of thing like I'm looking at a 10-year chart right now. Or I'm sorry, 5-year chart. When you open it up to a 10-year chart. Go to a 10-year chart, you're still above 200 most of the time. So if you get down to that 202, sure. But had you bought that dip that happened January 12th, 2016, it went from basically a low of 399 back up near 550. I think the high of the up move on that was it was about 542 or so. But then it dropped right back into the 350s. The timing of these things, the way you have to time these things, when you're one of those people who says, I just buy every dip, if you time it wrong, you're bankrupt. You really are. These things move. And yeah, you could buy Chipotle every single day. Sure. Why not? I mean, where did it IPO at? It IPO'd above 200, I want to say. I don't know.
I do not remember. That's forever ago.
It is forever ago. CMG IPO price.
How can somebody be expected to remember that far back?
Let's see. $22 a share. This is IPO. So yeah, nobody's, by the way, that's not, they've done much better than Blue Apron. But that's not something that, it's not going back to 22. No, I mean, not today.
If it goes going back to 22, Chipotle's got a big problem.
Yeah, it means they started cooking with rodents.
Yes. I mean, wow. What was its low, though, in, when was that? Its low in 08.
They IPO'd at 22, and they ended up at 44 that day.
And then they were back to 36 in 08, and then they went on a tear.
You shouldn't buy every dip on the stock because, Tesla IPO'd at $17. No one is saying Tesla's going to $17.
I might be. Especially with Elon's tweets this week. Elon's gone off the rails. That's for a different segment. Elon's gone. He's been mixing a wine with whatever he's tweeting about because he's gone nutty.
Just love that guy.
He should be focused on his model 3 rollout or production stuff instead of other.
He should be focused on getting in the sun or getting some bronzer. When you're slightly overweight with a tiny head, you should not be pale. I'm sorry, I know it's not cool to talk about people's looks, but I think he's just so much fun.
Or the garden equipment, the pail, the hoe, the rake, the trowel, all the garden equipment.
You know, it's too bad Dick's Sporting Goods doesn't sell garden equipment, because they just announced this week they're going to price match with Amazon. So in their store, if you call it up and say, look, I can get on Amazon cheaper, they're going to just price match it. They have price match guarantee for Dick's. You guys, I'm really offended right now.
I know.
Dick's chart, I think we're pulling back to the last major support area of about 34.33 to about 33.50. And then if we break through that, not good.
Yeah.
Not good on a longer term Dick's chart, but that's very key support. So if it pulls back there, and then it was a nice reversal pattern, that could be at least a short term trade opportunity. Although we're then fighting the retail apocalypse of Amazon pretty much taking over everything. So
Retail Mageddon. What do they call the end of the world in the Bible?
The next segment.
There's a word for that.
The next segment.
It's the end of the word for Tesla for the next segment.
Oh, well, did you see this?
Bob's predictions are coming true. Fast and Furious.
Porsche's developed a better fast charger than Tesla now, and they've revealed their 2 new electric car charging stations that will mostly recharge this forthcoming Mission E car. Now, I have a picture of the Mission E car, which I like. I think it looks a little better than the Tesla, but it's going to recharge the car in just 15 minutes. It's a pair of 800-volt chargers. These are already installed in Berlin and have the power to recharge car batteries at 350 kilowatts, giving the vehicle an 80% charge in just a quarter of an hour.
It's a gorgeous, gorgeous car.
The German manufacturing, I don't want to say army, but might is starting to come down on Tesla's little bubble.
This is exactly what we were talking about.
You got it.
Look how freaking beautiful this car is.
It looks like a Volkswagen Bug. But anyway.
Would you stop?
I think it looks great.
I think it's amazing. I'm a Porsche guy, though. I've had a couple of them. I love them. Great cars. And they usually make daily drivers that are really cool looking.
Mm-hmm. But that's almost getting to the point where you recharge your electric car
while
in
driving.
15 minutes. That's almost like, hey, I'm pulling into, it takes 6 or 7 at a gas station, so it's just about double the time. And as long as they have an espresso bar there, Bob, you're fine, because you could grab an espresso, let your car charge for 15 minutes, and you're back on the road.
Guess what? Here's another prediction for you, Stafford. Guess what the very first high-end option is going to be when self-driving is the thing? Espresso bar in the car.
Agreed.
It's going to come out of the dash. It's going to also be your iPhone case, and it's going to make coffee.
That's your prediction?
Mm-hmm.
I think in the Italian cars, I'd agree.
What are the Germans going to have? Beer?
You're.
Hey, is Elon Musk, in terms of like his sort of sensitivities, is he like the Donald Trump of the business world, where he said, where it says Tesla, for what it's worth, has promised to develop a supercharger that makes the 350 kilowatt look like a children's toy?
Yeah, he goes a little.
It's a little sensitive.
He gets very sensitive when anything's questioned.
He's more of a David Lee Roth and Eddie Van Halen, not a.
There you go.
No, I'm going.
Who's his Eddie Van Halen?
No, he's both those characters.
He's both of them. Those two guys hated being disrespected by each other.
Hated each other.
Yes, they did. I remember watching an interview with Eddie Van Halen where he was like, and he looks at me and I'm like, what? It's just like everything David Lee Roth said offended Eddie Van Halen. He was so offended.
Can you talk about Netflix earnings? Because they've hit a new all-time high, 187.17.
Did you just say new all-time high?
Yes.
Not an all-new time high? By the way, I tried to say that in a video and screwed it up more than one time. I was actually trying to do a CME video, and I was trying to say all new time highs, and I'm like, sorry guys, I got to start again because I kept screwing it up. I'm like, all time new, damn it, time all new, damn it. I kept screwing it up. I just couldn't get it right.
So your brain does not work like mine, huh?
No, I couldn't make myself say it wrong.
So you're lucky your brain does not work like mine.
All right, so they beat revenue slightly, $2.79 billion versus an expectation of $2.77 billion, and they missed on EPS, 15 cents versus 16 cents. But the stock jumped. How far did it go up? 10%?
Well, let's see. Before earnings, they were trading right around.
They nearly
150. They were trading 150. Now they're at 187. So that's almost 20%.
They nearly doubled the expectation for subscriber growth. Both nearly doubled. Total net streaming additions, 5.2 million. Expectation was 3.27 million. Domestic net streaming, 1.07 million additions. Expected 633,000. International additions, 4.14 million. Expecting 2.63 million. The addition of the 5.2 million in Q2 was the largest ever increase during the period, and that has traditionally been the company's slowest quarter, by the way. And I believe, I might be wrong about this, but I believe this is the first time that international subscribers are more total than domestic. Not sure if I'm right about that, but I think I heard that.
Okay.
So yeah, their earnings weren't that great, but the subscriber addition was crazy.
That's the number everybody's watching.
Do you have anything to add to that, Michael?
The thing is that they're paying what are they paying? Over $100, at least in this country, to attract a new subscriber. And most of the subscribers are subscribing at the $7.99 tier. So your break even, you have to retain a subscriber for 12 months, essentially it's actually longer than that. I think the break even's about 13 and a half to 14 months to get your break even on a subscriber. And it's going to be interesting because Netflix also in their conference call afterwards said, quote, "We think it's wise to continue to invest. We expect to be free cash flow negative for many years. We anticipate a free cash flow of -2 to -2.5 billion for the full year of 2017. Their free cash flow chart is wow. It's just wow. I hope they don't burn through all their cash. And their forward PE ratio is at new highs, trading at, when I saw this chart, 101 times forward PE.
Wow.
See, I'd be in Amazon before I'd be in Netflix because Amazon's got a pretty diversified base and keeps growing across all things. Netflix, yes, it's a streaming service, and I was reading some articles today. Essentially, Netflix is funding all the shows that Amazon will pick up in a couple years when Netflix runs out of money.
Right.
So I would not be paying 101 times forward price to earnings. So this is already based off their projected price to earnings. We're trading 101 times that. That's ludicrous territory for me.
Ludicrous mode.
Yeah, that's ludicrous mode. So I'd be really careful with this one.
You know, I think wins this whole thing, HBO.
Well, their Game of Thrones season 7 premiere set an all record for streaming on a premiere.
All new time record?
Yes, all new time record on a show streaming Game of Thrones.
HBO is the best at original content, and that's clearly the way it's going. It's clearly the way these things are going to be surviving. I mean, I can't find movies that I want to watch, and that might be a generational thing. They might just be too expensive to secure the rights to. I don't know. So when I want to watch original content, I find myself at HBO and Showtime more than anything. But they clearly have the most successful original content, things like Game of Thrones. I mean, Orange is the New Black's pretty successful. Amazon, I think, in some of the new stuff I've seen, is already better than Netflix at it, and that's a function of money, right? They can throw money at stuff. I mean, Patriot on Amazon was ridiculously good. Like, I'm sitting here anticipating the new season of it. If, I heard it's been renewed and I can't wait. But HBO's got such a head start on original content, and they've got such talented people, from what I read. I don't know for sure, but I just know that their original content kills it. Every time they release something, it's good. I think Showtime's really good at it too. So those guys in the streaming area somebody is going to get hurt. And I agree, Mike. I think probably in the long run, it's Netflix.
Well, again, HBO is not just a streaming service.
Right.
Neither is Showtime. Right. Amazon's definitely not just a streaming service, but they're making some amazing streaming content.
Right.
And so, and now you have Hulu came in, with their original content with The Handmaid's Tale, which was very, very good. Mm-hmm. So there's a lot of options out there for streaming stuff, and Netflix is paying a fortune for some of this other content rights. And as you said, I can't find a lot of movies either that I watch on it. It's mostly just original content.
Right, and it's interesting because like the owner of Showtime is CBS, and the owner of HBO, I believe, is Time Warner. So you can't really play those stocks, right? So you're not looking at a situation where you're gonna I'm gonna buy HBO stock over Netflix. That whole rant I just did was agreeing with Mike on Amazon over Netflix if you want to play streaming, just because of the diversification of it.
Mm-hmm. Yeah, if somebody was forced me to get into either, you're gonna have to just invest in Amazon or Netflix, it would be Amazon all day long.
Mm-hmm.
All day long. So we have a lot of this was a big week for earnings. Very big week for earnings. We had Bank of America come out, earnings per share 46 cents versus expectations of 43 cents. Their equities trading revenue was actually up. But people were not terribly impressed with that report. They're caught in a nice horizontal channel. So in terms of their chart, we'd have to see them get above 25.50 to be bullish on it, or watching if it gets back below 22, then it's pretty bearish, and we could see a return to about 18 on Bank of America. Goldman, what'd they do, Bob?
Goldman Sachs, EPS $3.95, expected at $3.39. Revenue was $7.89 billion. Expectation was $7.52 billion. They did say challenging environment characterized by low levels of volatility, low client activity, and generally difficult market-making conditions. And Barney Frank said that clearly Dodd-Frank didn't hurt the bank's ability to make money because they're all making record profits. That was Barney Frank's comment added to that.
Well, thank you. So
it just shows that he's still politicking, but go ahead.
He's still politicking?
Yeah, because it's not that simple. I mean, yeah, the banks made money, but they may have taken more risk. We don't know the exact characteristics of the money they made. And when you have somebody like Goldman Sachs saying there's low client activity and general difficult market-making conditions, that translates into them taking more risk to make their number. But he is right about loan growth, though. I mean, consumer loan growth, 66% since consumer loan growth is up 52% since Dodd-Frank was signed. Now, obviously, it didn't take effect right away, but I don't know what date to look at when I look at that. So I'm just going to go with the date it was signed. And small business loans and industrial loans from small commercialized banks, up 66% since Dodd-Frank.
What else do we have? We have Morgan Stanley.
EPS 87 cents versus an expectation of 76 cents. Revenue $9.5 billion, expected at $9.09 billion. Interesting again, the banks did well, but what did the XLF do? Did the XLF do well?
XLF.
I'm going to go with no.
It's trading against its prior highs of resistance right around this 25 level. It has to get above 25 to really break out to the upside. By the way, just back to Goldman Sachs, and chart not looking so great. Would not be looking to go long this until it gets above 230. It's pulling back. It's going to have to hold key support at 213. If it gets below 213, we could see a pretty sharp drop in Goldman Sachs. On the other hand, Morgan Stanley's chart is looking much better. If it gets a close above about 47.50, it's a bullish move for Morgan Stanley, and we could see a pretty nice run to possibly 51.
Yeah, again, like at this stage, even the earnings doesn't trump the yields on 10-year notes and the yield curve when you're looking at banks themselves. So you can't, I mean, banks did really well. They should be way up, and they're not. When they're not getting killed, but like overall, banks should be way up, and they're not. And the reason is the 10-year yield chart. You just look at the 10-year yield chart, and from basically yields made a high at 239 or so. It's actually almost 240, so it's a high of 239.6, and that was July 7th. And since then, we're at 224 now on 10-year yields. And the short end, as you can see by the Fed, hasn't gone anywhere, so that gives you a flatter yield curve, harder for banks to make money. So the yield curve is more important. If you're interested in bank stocks right now, the yield curve is more important than what they delivered on earnings, clearly.
Very good insight. Other non-bank related companies, still not a chart I'm touching. IBM. Do you have an IBM chart?
I can get one in 2 seconds.
What do you see on a weekly chart?
A weekly IBM.
Maybe.
Hang on. Let me get it up. This is that kind of a themed podcast, isn't it? Let me pull one up. Oh, that is not good. That's a weekly collapse, is what I see.
That's like a bunch of people trade that as a Head and Shoulders.
It was a potential Head and Shoulders, but it's not one. It was a potential double bottom on the weekly, but that's gone.
People are going to see that on at least chart I'm looking at as a sloppy head. A bunch of people trade it that way. It wouldn't be for rules, but
yeah, I mean it's not. Hang on, let me tighten this thing up here. Head and shoulder. Yeah, it's not. I mean, I see what you're saying, but it's.
I'm just talking about we wouldn't come up with our price levels based on that, but a lot of people spot that and say, that's this is still a stock I'm not touching yet. They need to really be. I didn't understand why it ran up again. I'm watching. This is a long term. It's not going anywhere, but it needs to build a solid base and then really.
That is not a buy.
No. Let's see, Qualcomm. We haven't talked about Qualcomm in a couple weeks.
I just got a text about Qualcomm.
We were watching.
Want to hear the text?
Sure.
Good morning. Any buys today or shorts? Is Qualcomm going lower? That's the text I just got.
Qualcomm, is going lower.
It is going lower.
Yeah, I wouldn't be shorting it at this point. And this is a very short-term play. We were watching for a weekly double bottom, which did not trigger for us. We've covered this also in our Path Chat stocks. Now it's no longer a valid double bottom. We're into triple bottom territory. So that is definitely off the table for a potential buy.
Some people will see this as a triggered double top, but that also doesn't fit our rules on the daily. But it would have triggered a while ago. It would have triggered, on the 16th of June.
So I'm not doing anything with Qualcomm.
Yeah.
Nothing going on with Qualcomm for us. Microsoft. That's lumped in with the FANG stocks again. Hit highs 74.30.
Don't worry about it. Just buy every day.
Fourth quarter adjusted revenue, $24.7 billion versus estimates of $24.3 billion. Adjusted earnings per share, 98 cents versus expectations of 71. Again, that's adjusted. I was looking at their effective tax rate.
Mm-hmm.
Did you see what their effective tax rate was on this last earnings report?
I didn't look at their
negative 17%.
How does that happen?
It's because it's when you get to adjusted, when you get to the non-GAAP stuff, you can do a lot of interesting wizardry. Let's put it that way.
Wizardry.
Yeah,
it's a good chart. I'd want to see a pullback to like 71.5, 72 before I bought it, but it's a nice looking chart.
It is. Yeah, it has to pull back to its rising rotation zone for me.
Yeah, agreed.
I wanted a Stafford tie-in with Wizardry and the new Atari console.
Can't believe Atari's got a console.
Yeah, the Wizardry, I dug deeper. I did some real journalism to see if this Atari box is real. And the consensus on the street is that these are just magic tricks and not reality. This thing is not going to exist.
I can't buy the hat?
No, that looks... I'm not contributing to the hat. That's another deranged person talking about Atari.
What do you mean another deranged person?
No, I mean that Ridley Scott made a deal with Atari to license the Atari logo for the new Blade Runner film.
Interesting.
So that's how they got some of their money. But supposedly the Atari box is going to be crowdfunded, which means they don't actually have a working thing. But those are rumors. We don't know if it's going to be crowdfunded or yet. But nobody...
Why couldn't they have a working thing even if it was crowdfunded? A lot of crowdfunding has working things.
Atari's not a real company. You know, it was bought out of bankruptcy for like $2.50. So whoever owns Atari isn't a player in the game.
How do you know? No, look, they're introducing the speaker hat, which is
Mike, are you claiming fake news? By the way, are you claiming Stafford is producing fake news?
Yes.
That's stitching in that hat. That's not real speakers. You can see it's stitching.
They're coming out with the speaker hat.
No, they're not.
Yes, they are. It's a baseball cap with embedded high-quality speakers. Not headphones, but speakers in the bill of the cap, and a microphone that uses Bluetooth to connect to devices.
The picture you sent, that's stitching. That's like a fake embroidered speaker.
There might be a speaker under there.
Stafford, would you talk to him, please?
Here's what I think, Mike. I think that Atari needs to look like they can actually make something. So they went to the Xizan district in China and bought this hat and embroidered their name on it and are telling people, look, we can manufacture things. Now crowdfund our pretend retro video game box.
But this is wonderful because Atari also promises a, quote, fundamentally new social audio experience, end quote, with multiplayer mode, which allows multiple users to listen to a single audio stream via Bluetooth in your hat. Is that not revolutionary? Snapchat should buy Atari. Because then you got the glasses and the hat. You didn't see that one coming, did you?
No, all I care about is that Atari sold their name out of bankruptcy to Ridley Scott from the new Blade Runner movie, because that's what matters in this world.
You're ruining Atari for me. You're now putting it in going to zero corner.
All you need to do is look up...
Wasn't it already at zero?
Yes, it's been
already
zero
going
for
back to zero.
2 decades.
Going back to zero. Come on, I want to play Yar's Revenge. To Elon's corner.
I love Elon.
Elon's been a lot in the news this week.
Don't you pick on Elon.
I'm going to pick on he already had, where was this? You know, was talking, what conference was that in? I don't remember, but he had some great quotes. He's talking about how AI is going to wipe us out. It's inevitable that we have to shift to sustainable energy, which is a shocker coming from him. Elon noted that the sun is a giant fusion reactor in the sky. It's really reliable, he said. It comes up every day, and if it doesn't, we've got other problems. So he thinks that it takes forever, that in the past has not been a bad thing, but not something which represented a fundamental risk to existence of civilization. AI is a fundamental risk to the existence of human civilization. That's why he's going to Mars.
Love him so much.
And then, and Citibank came out that Tesla needs a stronger balance sheet before it's a buy. You think? And what really set everybody off was yesterday, his little tweet storm. Quote, just received verbal government approval for the Boring Company to build an underground New York, Philadelphia, Baltimore, D.C. Hyperloop, NY to D.C. in just 29 minutes. City center to city center in each case, with up to a dozen or more entry-exit elevators in each city. Then he came out a couple hours later because everybody's like, where'd you get approval from? What's verbal? Like all these municipalities like New York, Philadelphia are like, he hasn't spoken to us. What is this? He's like, still a lot of work needed to receive formal approval, but I'm optimistic that will occur rapidly. If you want this to happen fast, please let your local and federal elected representatives know. It makes a big difference if they hear from you. And then he came out with this morning, verbal approval was at the federal level. Still a lot of work to do before formal written approval, but this opens door for state and city discussions.
Wow.
Do you know I don't care if federal approval, it's got to go through every state and all these cities and everything. And I lived in New York City for years. You know how much it takes to even get a subway tunnel dug?
How much it takes to even get on a subway?
I mean, it's when you're boring under these cities, you're just like, hey, let's just start. I hope has to have like $1 trillion money tree if this is going to happen.
He's just batshit crazy. I love him so much.
He's going a little off, and he should be.
He's going off the rails. I mean, once he started with that "we're living a simulation" thing, once that got out, everybody was like, "Is he a little off his rocker?" And by the way, I'm not saying we're not living in a simulation. I'm not saying that at all. I'm just saying, once he put that out there, it's just like, oh, he's losing it.
He's. He's got this big Model 3 rollout, and everything else that he's ramping up to produce 20,000 cars a month by December. And he's going off on making a tunnel but under New York to DC and all this other stuff, and nothing on the Model 3. He's got his hands full many things.
He's got his hands full.
I want to see a little more focus on his solar roof and his car than he's very, very interesting. But we've had a lot of stuff in cryptocurrencies this week. We talked about the SegWit 2 and the SegWit and Bitcoin, huge rally over the last couple days, because about 80% of the miners were looking to adopt this SegWit. They're still not finalized. I think for anybody dealing in cryptos, you're going to still see a ton of volatility for the next couple weeks. A lot of volatility, because it's based off, is it going to get adopted? Is there going to be a hard fork? Is there not? Is there going to be like a 90% adoption rate and a 10% holdout rate that's going to be still a hard fork, but then you're still going to have two currencies come out of it? That's pretty big news. So you'll see these run-ups and then these pullbacks based off of the adoption rate and what these what's going on in the moment with the latest Bitcoin news. I'm just seeing if there's any updates on this as we speak, because this is pretty much coming out real time. Mm-hmm. Newest headline: Bitcoin price nears all new time high amid sweeping SegWit support. That just came out. So let's see if there's anything notable. BIP91 is now locked in, having met the requirements, signaling the threshold at 80%. We talked about BIP91 last week. 95.1% of Bitcoin's hash power is now signaling for BIP91, enabling miners to activate SegWit as a scaling solution, at least in the short term. So they're up to, looks like 95% are on board with the SegWit and the BIP91. So, but if anything is to change with that, we could see more and more volatility and quick pullbacks and quick rallies. And then we talked about ICOs, initial coin offerings. CoinDash was doing an ICO this week, and it sort of went a bit sideways. Somebody hijacked. It looked like somebody redirected the DNS servers for the ICO and put up a fake page. And so all these people thought they were getting in on the ICO. They were giving all their Ethereum to a hacker who ended up stealing, they're estimating at this point now about 10.3 million. Because people donated it they donated it to him. They thought they were getting in on a coin offering, which is the hot stuff, and everybody's trying to get in on these coin offerings, and somebody hacked it and ran away with about $10 million. So what was that other headline I was talking to you earlier about, Bob? It was like 1.3 billion put in already this year in initial coin offerings, and 600 million in the last month.
1.3. There was the 35 million that happened in one day. Yeah, it's, we talked about it a little bit before the show, where it's just like, a friend of mine was like, we need regulation of this. I'm like, no, we need people to know that doesn't happen in normal life. We need education, not regulation. Anyway, whole nother thing. But yeah, it was
this is going to get regulated.
Yeah, it is. It does.
Yeah, the law bringers will come, but after the robber barons grow their
they're done.
After they get their new money fortune. Right.
Mm-hmm.
So Ethereum co-founder says crypto coin market is a time bomb. Initial coin offerings, which we're talking about, people say ICOs are great for Ethereum because look at the price, but it's a ticking time bomb. That's a direct quote from Charles Hoskinson, who helped develop Ethereum. He said in an interview, there's an over-tokenization of things as companies are issuing tokens when the same task can be achieved with existing blockchains. People are blinded by fast and easy money. There you go. That's from the co-founder of Ethereum. So he said people are just dumping monies. Oh, direct quote, ICOs operating in the Wild West of finance isn't sustainable. Have we not said it's the Wild West? See, you must listen to our podcast.
There you go.
Quote, if it talks like a duck and walks like a duck, the SEC will say it's a duck. I like that quote.
Yeah.
The SEC is the Securities and Exchange Commission, so there's going to have a lot more regulation in this stuff.
How do they police regulation in something that's literally designed to not have government involvement? That's going to be interesting.
Happen.
That's going to be interesting. Well, I mean, they're going to try to, right?
Yep.
And what they'll do is they'll do those random arrests that are supposed to be like messages to everybody else. It'll just be that kind of stuff. Typical fact. Never mind. I was about to get political. All good. Drain the swamp.
And finally, Goldman Sachs granted Settlecoin cryptocurrency patent. Settlecoin is
Goldman Sachs has a coin?
No, this is a patent. It's a cryptocurrency patent. They're proposing their Settlecoin, SETLCOIN, cryptocurrency settlement system. Mm-hmm. This is using cryptographic currency for security settlement. Mm-hmm. So it's going to use, like we sort of, I thought it before this came out, we talked about it last week, where they're going to start doing stock settlements and everything, and more financial trading done with using blockchain for settlements. And this is a patent sort of along those lines. Mm-hmm. So, but settlement, Goldman patent filed this initially back in October 2014 and just got the patent in the last week, I guess.
Yeah. Goldman Sachs.
This stuff's not going away. It's just it's at some point, it's gonna
become like grains and beans and high concentrated orange juice and everything else that was exciting in the day. It will become boring.
Yeah.
Boring.
Yeah.
We already talked about boring. DC to New York, 29 minutes.
Elon's getting ripped on his couch on a regular basis. That's what's going on. He's going in and out of different realities.
That's maybe.
Favorite person in the world right now. He's so crazy.
There is. He provides a lot of entertainment throughout the week.
Just love him. Really do.
Whenever you feel there's a dull moment, he tweets something, and then it's like, yes.
Yeah, if you don't follow Elon Musk, you're just missing out.
It puts a smile on my face.
Yeah, cool.
But nothing in the last couple hours. He must. Oh well, what's going on in the U.S. economy segment, Bob? Anything that caught your eye? Wasn't a lot this week. No, there wasn't anything from the Fed, really.
No, there really wasn't anything from the Fed. What caught my eye economically this weekend wasn't focused on the U.S. It was ECB. It was Euro.
Which we'll get to in a second. But the only thing that caught my import prices were down negative 0.2%, coming in with expectations. Last was negative 3%. Export prices, though, were down negative 2% versus expectations of 0.
Mm-hmm. What happened when the dollar surprisingly weakens? It was a nothing economic week. It was more of a currency week than an economic week.
It was more earnings than currency week.
Yeah, bank earnings, and definitely. But I mean, from the economic standpoint, it was definitely focused elsewhere. It was focused in the currency world.
And our favorite Fed model from July 19th, which is the last revision I've seen, the GDP Now model, GDP growth in the second quarter forecasted at 2.5%. So that's our GDP update. Then we can talk about currency international markets, because you also had the Bank of Japan, the ECB, and then Draghi speaking.
Yeah.
So, do you want to talk about any of that? Because you're like Mr. Currency.
Yeah, I want to talk about Draghi. I don't care much about the BOJ. The BOJ moved their interest rate target, but it wasn't that interesting. It moved the dollar yen. But the biggest thing that happened this week economically was, like I said, in the currency markets, and it was the ECB's decision. So the ECB kept their, they kept their marginal lending facility rate unchanged. They kept their deposit rate unchanged, deposit facility rate unchanged. By the way, the marginal lending facility is at 25 basis points, and the deposit facility is negative 40 basis points. So negative rates still exist, in a very large economy. That's at the ECB. So what that means is banks, if they keep money there as opposed to lend it, they actually pay 40 basis points, almost 0.5%. And they kept their asset purchase target at 60 billion, which is down from 80 billion when they moved it last year. So that was all expected, and mostly people were wanting to look at the statement of the ECB, right? And what people thought/hoped would happen, people who were long the euro, again, thought or hoped would happen, is that they would remove the following statement. And before I read it, they did not move it. They did not remove it. The statement everybody was looking for them to change or remove was, if the outlook becomes less favorable or if financial conditions become inconsistent with further progress toward a sustained adjustment in the path of inflation, the Governing Council stands ready to increase the program in terms of size and or duration. So the program they're talking about is the asset purchase program. They recently took it down from 80 billion euros to 60 billion. And when they did that, they said we reserve the right to make it larger again, to jack it back up. They left that statement in, which everybody thinks is a little crazy for two reasons. Number one, the EU, while their inflation dipped this month, year-over-year inflation went from 2.6 to 2.9. I'm sorry, 2.3. Well, so while that dipped, their economy is still outperforming the U.S. economy, and it's strong enough. If it's strong enough for the Fed to raise rates, it should be strong enough for ECB to raise rates and start to taper their purchase program. The second reason is the PSPP, the public sector purchase program, has a limit. They can't have more than 33% of their assets in the public sector, the ECB. They can't own more. In the total assets they own, only 33% of them can be public sector assets. And they're approaching that as they continue to buy 60 billion a month. So they have to start talking about tapering that program, and they didn't. And not only did they not talk about it, they left that statement in that says they could increase it again if they need to. So that came across as dovish. But then the press conference came. So Bloomberg had a clever article where they said Draghi is already tapering. He's tapering the time of the press conference. Press conferences are supposed to be 60 minutes long. And according to the Bloomberg article, he's been making them shorter and shorter. So he's tapering the time. His October one was 45 minutes. January was 45 minutes. The one that he just did was like 46 minutes. So he's been tapering the time of the press conference. He didn't really say anything about tapering except that, so every time reporters say, has the council talked about tapering? He says, we have not discussed it. And he did that again in this press conference. But he laid out a timetable to talk about the timetable of tapering. And that reminds me, you guys remember when OPEC agreed to agree to a production cut? That's kind of what this sounds like. OPEC agreed to agree to a production cut, and then they came out with a production cut. Draghi agreed to a timetable to talk about the timetable of tapering, and he said that's going to be this fall. And one reporter said to him, is September the fall? Because they have a September meeting. And he said, I'm not willing to say when the fall is, just that we're going to talk about it in the fall. So
It's the fall. When's the fall?
One of the commentators I was listening to said, okay, the equinox happens on this date, but the ECB meeting is before that date. So is the next ECB meeting the fall? Well, Draghi wouldn't say. So the most interesting thing that came about the press conference and spiked the euro a second time, the euro spiked pre-meeting, then the meeting came out and it stayed level, even dipped a little bit. Then the press conference happened and a reporter said, is the governing council concerned with how fast the euro's been rising? And he didn't answer it. And that to me was telling in a way. Maybe I'm reaching for Fed minutia, but that to me is very telling in a way because Draghi's very good at answering questions. When he answers questions, he always says, in response to your first question, here's my answer. In response to your second question, here's my answer. He's very good at answering. He didn't answer that question, and that spiked the euro above 116. So we are trading on minutia with the euro. I mean, absolute minutia. Most people took the statement and the press conference as dovish, but they took Mario Draghi's stance as hawkish because that's what the market wanted. So they found it. And there's your currency update. That should have been my what, or my why rather, but go ahead.
The euro did trigger a horizontal channel breakout last week with the close. Now rallying this week. The first target is 118.
Yeah, it's going. It's going there.
118 for the. I just love. Draghi was great this week. You pretty much summed it up. Can you talk? We skipped over crude oil. Is there anything you want to talk about with crude oil? It's pulling back again today.
Yeah, crude oil pulling back today. There's a service out there, and the name escapes me right now, but there's a service out there through satellite imagery, measures the amount of storage that's in tankers. And they said that this month is going to be the largest production month for OPEC in, God, I don't know how long. I could probably find it while we're talking. So while we continue to talk about this July 24th meeting between OPEC and Russia, which is happening this weekend, where they're supposed to be talking about production, among other things. They've got a deal they're supposed to be doing together, but they're also supposed to be talking about potentially more production cuts. Crude oil down 171% as we speak. Let's see. It's the heavy crude. Heavy crude oil is what most of what OPEC produces, and heavy crude has definitely gone up in price, but the rest of the crude sort of sector has not. So again, this whole, I can't find it, but I wish I could find the company that does this. They use satellite imagery and they measure the depth of oil tankers. So how deep they are into the water. And they're very accurate, actually. For a certain amount of depth in the water, it shows a certain amount of oil in those tankers. And they can't fill them with other things because it's too much work. If you've ever talked to anybody that does physical delivery of oil, it's not like you can fill it with something else, because then to refill it with oil, you spend tens of thousands of dollars and months to clean the thing out properly so the oil is not, what's the word, damaged or compromised by the other liquids or the other things you put in there. So they say this is going to be OPEC's biggest month since the production cuts. So that's what we're selling off on now. Otherwise, oil remains in the range. I mean, it hasn't done anything. I talked about it last week where oil likes to be in a range, and it's in one right now, so it remains there. So nothing big is going on. I got the meeting on the 24th.
Very good. Huh.
Wish I could find buddy.
GE also did release earnings. 20, they're at, what did they, I can't do it with the pop-up in this thing. I got to look up their earnings.
I don't know. I don't have it in the book.
Huh. But it was something that it might have been discussed. GE earnings. What did they come out? Because they've got hit this morning. Really? See, they have this is so misleading. See, they keep saying General Electric beats because it came out with better numbers, but they were way down from last year, and it had a pretty big sell-off. Did it gap this morning? Yeah, yesterday it closed at 26.69. Today it opened at 25.38. The challenge I have with sometimes the what segments is I talk about so many what's during the show.
I know. Same thing with the why.
I'm all whatted out.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
So my why for this week has to do with two things that I already talked about briefly in the podcast. Number one is Mario Draghi, and number two is yields, treasury yields. So treasury yields are going to be the thing that dictate whether the market goes up or down for the coming weeks. And obviously they'll be driven by other things, but treasury yields now are playing off of potential inflation. They're not playing off of the Feds globally. They're not playing off of any of the central banks. They're playing off of economic data, which is the way that things used to trade. Everyone is pretty much under the impression that global central banks, at least the major ones, are going to stop removing accommodation, which is a polite way of saying tightening. Mario Draghi will not say tightening or taper. He always says accommodation. It's like his nice way of saying it. It always reminds me of like an Italian guy who cheated on his wife, and he's like, no, I did not have sex with her. We were just talking. Now, this is a nice way of saying a bad thing. So the yields on the 10-year in the U.S., as I mentioned earlier, have dropped from almost 2.4% down to 2.25%, 2.24 as I speak right now. And that's what's caused the market to kind of rally back up and hit why can I say it wrong? Could you say it for me, Mike?
All-time highs?
All new time highs?
All new time highs.
That's what's helped the market reach all new time highs is yields backing off, not anything else. And the Fed hasn't really backed away from their script. The U.S. Fed hasn't really backed away from their script of starting to remove assets from the balance sheet by not reinvesting. And by the way, I heard a commentator the other day, and it was somebody on the CME group. I'm not going to say who. Understand the Fed is not going to sell things off of their balance sheet. That's not what they're talking about doing. They're going to halt the reinvestment of maturing securities. So the taper was when they stopped buying securities. Okay, they stopped going into the open market and increasing their balance sheet. The sustained taper is them keeping the same level, the 4.7 trillion that's on their balance sheet now, by reinvesting proceeds of expiring securities into the same type of security. Now, if they make money on it, they end up with a little bit more. If they lose money, they end up with a little bit less, but it basically stays at 4.7 trillion. I heard a commentator that is on the CME website sometimes say that they're going to sell off of their balance sheet. That's not what's going to happen. They have announced no plans to do that, and they may never do that. They may just let things expire and not buy new ones and keep the cash, send the cash over to Treasury. But anyway, yields have been falling. And with yields falling, the market continues to see easy money and stock buybacks and the like, and that's what drives markets. higher. It's really nothing else now. And the yields will be driven by the economic data, as we saw. The fall comes after a weak CPI, the fifth week CPI in a row year over year. So that's what's driving it. It's treasury yields. Mario Draghi this week, last week he had a speech in Sintra, and in Sintra he caused a mini taper tantrum in the Bund, where Bund yields spiked up, and you saw a sell-off in European equities. And he came out and corrected himself, which was an interesting correction. He basically said that as the market gets stronger, we're going to have to remove accommodation. And then he came back and corrected himself and said, what I mean by that is to keep the same level of accommodation, we have to basically raise rates and reduce the balance sheet in order to keep accommodation the same. So if you put it on a scale, if the economy in Europe was at a 10 and the level of accommodation was at a 6, if the market moves up to a 12, the level of accommodation has to move up to an 8 in order to keep the same spread and keep the same level of accommodation. So he was trying to tell the market, no, it's still going to be easy money. We're just not going to make it more easy. These are the things that are now going to drive the equity markets. So if you think it's going to be earnings, especially in something like bank stocks, it's probably not. Less so in technology. Technology earnings will still drive. And healthcare is driven by Washington basically leaving it alone, because you see the healthcare ETF, the XLV, is doing really well this week as another version of the Republican healthcare bill dies. So it's different things moving the markets. And essentially, again, and this is probably a running theme in this podcast, is why we trade price action. When you look at Mario Draghi, the reason for Mario Draghi causing the Europe to rise was that he didn't answer a question. That's like 3 levels of esoteric. It's not data. It's not a statement about the data. And it's not a statement. It's a lack of a statement. It's a lack of addressing a point that caused the market to believe he was addressing that point. So going forward, if you don't know price action, be careful about just blindly buying things and just blindly selling things because it looks like the data is saying this. Sometimes it's a lack of things being said that drives the market. And that's what's happening right now. It's a lack in the increase in the 10-year note and global 10-year notes, so the JGB and the Bund, and it's a lack of statement out of the ECB that kept the market strong this week. That's my why.
Very succinct why.
I'm feeling succinct today.
That was sarcasm also.
I'm feeling as sarcastic as you are.
For all these, I'm just going to make my what Tesla, because for all these dip buyers, just watch out. Here's a clear line in the sand. If you get a... Huh?
Nothing.
What was that?
I said I'm just doing a How I Met Your Mother joke.
Oh. If you get a close below 303, it will trigger a sell signal or a short signal, and not recommending people short Tesla because it can rip your face off, depending on what Elon says, but that would have the next price target of 279 lower. So for dip buyers, if you do get below 303, I'd be targeting 279 if you want to buy some kind of dip. That's just the public service announcement for Elon and Tesla.
Just had a trader text me and say, is Qualcomm going lower? I mentioned that early. I said, yeah, it's going to 53.24. And he goes, today I'll play it big. We're at 53.45. It's going 29 cents, 31 cents, whatever, 21 cents. Yeah, I'll play it big. Okay.
Yeah, my target's 53.24 on Qualcomm.
Same here, yeah. I got 53.20.
Target. How did you come up with that target, Bob?
Oh, it might be price action analysis. I don't know.
That's my exact target.
It's my target too, 53.24. Just go in there today, I'll play it big. Okay.
Oh, no. When you say trader, that's like air quotes, right? Yeah. Around trader?
That is air quotes. Somebody with too much money is what it is.
I was going to say, you heard from a gambler? What's it going to come? Next spin on the roulette wheel. Red. Okay, I'll play it big. Crap.